everyone. So this tutorial is going to walk you through classified financial statements. So you'll see our note has been released on it along with a couple of examples. I want to walk you through kind of how all of this works together because we're going to start playing with the income statement, statement of owner's equity, and the new classified balance sheet together. I'm not going to build these for you because you've done enough kind of spreadsheet work now that you can figure it out yourself. However, I will walk you through it. And the do not enter sign here, that's at my school, some kind of technology hub in there or something. I've never been in there because I'm not allowed to enter. Okay, so let's have a look first at our trial balance. So Wanamaker's Bake Shop, Wanamaker's Bake Shop had $191,000 in debits and credits from assets, liabilities, equity, revenues, and expenses. You'll see we have our new drawings account as a debit of $3,000. All right, so this is going to act as our base for the next step. What we need to do first is we need to do an income statement, and I'm just going to highlight here so we see. These here, those are our income statement accounts. So I'm just going to take sales and then all of my expenses, and I'm going to do an income statement with them. So I'm going to show you that income statement right now. All right, so let's just focus on this part of our note, and I will take the yellow away shortly, but you'll see that these numbers correspond. So at $120,000 in sales, because that was the only revenue, I just automatically put it in the second total column. We had this many expenses. I subtotaled them and put them here. You know you have the option of adding an extra row that says total expenses if you want, if that's how you want to format it. I'm good with either way. 120 minus 23 means we have a net income of $97,000. Super important that we do that before we do anything else. So I've just taken that from this here. That's all I've done is just transpose that and figured out what my net income is. Now the next step I'm going to do is a statement of owner's equity, and I can't do a statement of owner's equity until I know the net income, but I also know now, I'm going to put this in a bit of a, let's call this the green one. And then I'm going to highlight this in green as well. And then actually, why not do this one too? So these are my statement of owner's equity accounts that I need to know to do the next step of my classified financial statements. So what I've done is I've calculated my net income of $97,000, my opening capital of $50,000 I just got from here, and my drawings as well of 3. So that's from the trial balance. This has come from the income statement. So we can see here that I have to do, I have to do my income statement first in order to get my net income. I got this from my trial balance, so that minus that means I'm going to have an increase in equity of $94,000 added to my original equity capital of 50. I now have a capital amount of $144,000 at the end of May. All right, now let's switch over. I'm going to put this all the way over here to our classified balance sheet. So you're going to see this looks a lot different than the balance sheets that we have been using. Now, this number here is going to become super important shortly. And the reason why we can't do our balance sheet until the end is because we need to update our statement of owner's equity or our capital account. So who, what, when remains the same on our balance sheet. But now what you're going to see is we have stacked our liabilities and equity below our assets. So we're no longer doing left to right, we're doing up and down. And we now have 2 columns, a subtotal column and a total column, and we have split up our assets into 2 categories. From your notes, you'll see current assets are assets we are going to use within a year, and they are listed in order of liquidity. At this point, you'll see 3. Cash, accounts receivable, and supplies. We'll introduce some other ones later on. So I subtotaled them here. I put my total current assets here. So I've got a major, right here, sorry. So I've got my major title is assets, my subtitle is current assets. I'm going to list my current assets and then subtotal them in this column. I'll do the same thing with my fixed assets. Those are assets that have a long life. Land, building, equipment is what we will see right now. In this case, we had equipment and building. And as I look, we should actually flip these. This should say building first. Sorry. Those are the right numbers. Yep. Okay, so I'm going to list those in the longest life. So it'll be land, building, equipment. So we just made that quick change. Again, as I say, and I think every video now, I am human, I make mistakes. So subtotal them here, put in the totals there. I'm going to add these two together, and my total assets equal $165,000. I'm going to double underline that because that's the end of my assets. So that's how I do my current assets and fixed assets. And then hopefully the right side, or the former right side of the equation, will be $165,000 as well. I'm getting these accounts here from my trial balance. So if we go back to the trial balance for a moment, and you'll see I'm going to go right down to bank loan, even though capital is going to go on to our balance sheet. I'm getting these balances strictly from the trial balance. And then I'm just ordering them properly. So my accounts payable, I only had one current liability. So you can do one of two things. You can either immediately put it into this column, or you can just do total current liabilities. Same with my long-term, I had a bank loan. Again, I got these numbers from my trial balance. There was really not any calculations I needed to do for that. And finally, I see that I have total liabilities, that plus that, of $21,000. And now this is where the statement of owner's equity comes into play. You will notice that in order for me to balance, I actually have to update my statement of owner's equity and find out what my capital is. And then from there, I take that number and I put it into here. If I took my original capital number of $50,000, which is what I might be inclined to do, you'll see I don't balance out. And you might be wondering, well, how come you don't balance out? And here's why. Because when the owner invests money in the business, the capital account goes up and cash goes up. When we make a sale, our revenue goes up and cash goes up. When we pay an expense, cash goes down, but an expense goes down. So a lot of the owner's equity is tied into this balance sheet and the activity that happens on this balance sheet. So, income statement. So the business makes an income, hopefully, of $97,000. We want to add that to the capital at the beginning of the month. The owner also took out money, so it went up $94,000, plus the beginning of the month we had $50,000. So now our capital is worth $144,000. We need to reflect that in the balance sheet here. We add our liabilities plus our updated capital, 165 equals 165, and we've balanced out. So that's how we're going to do classified financial statements. You don't need to color code. As per usual, I just color coded for a moment to show you where the accounts are coming from. So if you have any questions, let me know. There's an exercise there where I will put a similar type exercise where you will see a trial balance, and then on the second tab you will work on doing an income statement, statement of owner's equity, and a classified balance sheet. All right, see ya.